You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Another headline that caught my eye, and it's a fun one. Avian flu, oh yeah, spreads to second farm in Australia's Victoria state. So apparently, Mike...
That's a fun one for you, Alix?
No, it's not at all. Hundreds of thousands of egg-laying chickens are reported to have been culled in Australia's southeast as quarantine measures are put in place to contain outbreaks of highly pathogenic avian influenza. And I feel like we've been hearing a lot about this too in China.
Yeah, and I'm a hypochondriac, so I never like to hear about these things. I'm going to think I have it probably by the end of the weekend. So.
Right. But it just shows, like, I was emailing Sam Fazeli of Bloomberg Intelligence earlier, and I'm like, do we have to worry about this yet? He's like, not yet. I was like, thanks.
Emphasis
that made me
on
feel a lot better. Anyway, I did want to give some time to talk about this. Like, what is the bird flu? What is the avian flu? How do we get it? What does that look like? Lisa Jarvis is joining us, Bloomberg Opinion columnist. She covers biotech, healthcare, and the pharmaceutical industry. She was previously executive editor of Chemical and Engineering News, and she joins us now. Lisa, can you give us like the 411 on like what the avian flu is?
Right. So thank you for having me. It's an infection that, you can tell by its name, primarily has been affecting wild birds and poultry up until now. I think in recent years, we've been seeing a lot more species with evidence that they can be infected. And in the US, the thing that's been alarming about this is that we've suddenly seen an outbreak in cows. That's new. We've never seen this species infected before. So for the last few months, increasingly, we're seeing more herds with evidence that there's bird flu in their milk. The worry, of course, is that the more that this spreads, the more that this could cause infections in humans, which, we don't want another pandemic at all. I'm sure all of us here.
Yeah, I'll second that, Lisa. One thing that worries me about this story, Lisa, is from what I've read, many farmers are very reluctant to agree to testing to see how prevalent it is. Is there anything that can be done to that? I mean, I suppose you can't really just force a farmer to take a test or have his animals tested. Is there any sort of workaround for that?
I think we've seen in each week a new set of incentives trying to get the farmers to buy in to testing, because you're right, it's very worrying because we don't actually know how widespread this outbreak is among dairy herds. We know, I think, as of today, that 9 states have herds that have been infected, but it could be much more than that. Certainly when we see the data showing that there's, bird flu, pieces of bird flu found in milk in states that don't have infections, it worries us. I think USDA has been a little slow in how they rolled out some of the incentives. One of the things I think that could help is, just making sure that farmers understand very clearly what happens after one of their cows tests positive. One of their worries is they don't know when they can go back to normal operations. And then there's a lot of hesitancy on the part of farm workers, which is very understandable. A lot of them don't get sick time. This is a largely migrant population that may be distrustful. They don't have health insurance, many of them. So there's a lot of challenges to overcome. And I think trying to find ways to draw people into this process is the only way that we're going to know, have a good handle on in real time on what's happening.
Just to be clear, it's zoonotic. It can jump from animals to humans. And then can it go from human to human transmission?
Well, right now, we don't have any evidence that's happening. And in fact, the good news, this is very good news, and we should focus on that piece to feel better, is that the 2 cases in humans we've seen in the US, one in Texas and one in Michigan, are both in dairy farm workers who their only symptom is a conjunctivitis. So likely what's happening is a cow's not breathing on them. They're not being exposed to cow snot. Cows are actually very snotty, I hear. But they're getting this through exposure, likely from the milking equipment, because there is so much bird flu in the milk of infected cows. But that's the thing we want to look for when it gets easier for a human to be infected from a cow, when it gets easier for a human to infect another human. And that's why it's so important to have a handle on the breadth of the outbreak and in real time where infections are happening.
This time of year, I'm pretty snotty myself, so I can sympathize with the cows.
We understand.
Yeah.
It's the allergy season, man.
Yeah.
I was interested, though. There was a piece on the Bloomberg this week that shares of vaccine stocks, though, were moving on this. Apparently, Moderna shares were up, Pfizer shares were up. There was a report that companies are in talks with the U.S. government about the development of vaccines for bird flu. Shares of CureVac, for example, they have a bird flu vaccine in early stage testing. Is this just like meme stock hype, or is this a real thing?
I think investors are getting a little ahead of themselves. However, ASPR, which is the kind of part of HHS that takes care of, preparedness and manages our stockpiles, did say this week that they had moved the ingredients for making 4.8 doses of vaccines to a manufacturer and to put those into vials so that we would have them just in case. And that doesn't mean that even the just in case would be everybody. Probably if a just in case happened, it would be farm workers. But they also said that they were in talks with Pfizer and Moderna. Now, the good thing about mRNA is that if the virus changed to more easily infect humans, it might be that the vaccine we have in our stockpiles isn't quite the right match. And mRNA, as we know from the pandemic, allows some flexibility there. But I do think folks are getting ahead of themselves and maybe getting excited that there could be a way to fill some of that capacity that no longer is making COVID vaccines.
Lisa, I wonder, obviously for financial markets, inflation is such a big issue still, food inflation especially. Are we at risk of seeing a situation where massive amounts of cows or chickens are slaughtered just to stop the spread of this virus?
I don't think so. Well, certainly with poultry, that's kind of the dairy and poultry industries operate very differently, and poultry farmers are very familiar with bird flu, and they have a lot of biosecurity in place. And part of the reason they have biosecurity in place is that USDA has put a lot of, rules around how they can be reimbursed in order to contain a bird flu outbreak. When it comes to the cattle, so far infections are mild. And so I think what we need to understand is how long an outbreak will be disruptive in a particular herd. It's sort of amazing to think about how many different states cows travel to, dairy cows travel to in their lifetime. And so that the only worry I think, and this is part of the reason farmers have not been participating in testing, to be honest with you, I think is that they can kind of create a backup. But I don't think there's no reason to think that there's a risk to the food supply. I think it's just more just thinking about that movement of cows and how to make sure that we can ensure that that continues to happen.
Lisa, fantastic. You are awesome. Lisa Jarvis, Bloomberg Opinion columnist, joining us on the bird flu and giving us sort of the lowdown on the risks and the non-risks. So do you feel better now, Mike? Or
not at all, no.
He does not.
I think I have it. I think I have it.
Okay, great. Definitely want to spread that.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Eric Adelberg is Chief Mortgage-Backed Securities Strategist. There we go, for Bloomberg Intelligence. Help us understand what's a mortgage-backed security for those who are listening, and then sort of where are we right now? I mean, that's going to be tied to the mortgage market. How's it going?
Hi, Alix and Mike. Thanks for having me, and happy Memorial Day weekend almost to everybody. So a mortgage-backed security is a security that a bank or non-bank lender creates out of the loans that they've lent to the homeowner. They pool up these mortgage loans into these massive securities. It's about almost a $9 trillion mortgage market for the agency MBS market, and much bigger if you include portfolio loans and non-agencies. So it's a massive market. It really helps fuel the entire housing economy, which in turn helps fuel a lot of the economy. So it's a really important sector to keep an eye on. And it's been suffering a little bit recently because it's so important to the economy. When the economy went into free fall, both back in 2008 and then various times since, including during the pandemic, the Federal Reserve has purchased massive amounts of these mortgage-backed securities. And with inflation going rampant and the Fed actually trying to put the brakes a little bit on the economy, they've been letting that portfolio run off. So the mortgage-backed securities market has been really hurting as a result because a lot of investors have backed away from that market. But at the same time, because the housing market has slowed down so much and so many people own rates so far above current market rates, there's not a lot of business for mortgage originators to do right now. So
I know I feel like I keep getting emails from like mortgage brokers being like, call me, we can do stuff. And I'm like, dude, I got a 2.75% 30-year fix. No thanks.
Eric, I wanted to ask you about that exact topic. Should Alix refinance? No, that's not it. But
that's never happening.
It's not happening in this rate environment. But you write in a recent piece, elevated mortgage rates and home prices have depressed housing turnover and mortgage lending, as Alix points out. And then you go on to say, this has begun spurring, quote, innovations in mortgage lending. I get a little nervous when I hear about, quote unquote, innovations in mortgage lending, thinking back to the financial crisis and what happened in the MBS market and the housing market. Unpack for us a little bit what some of these innovations are, and are they as risky as the innovations that brought us 2008?
That's an excellent question. And I had the honor of attending the Mortgage Banker Association secondary market conference this week, where they touched on a lot of that exact topic. And, the good news is, even though memories tend to be short in the financial world, the memories, the scars from the 2008 financial crisis cut very deep. So as a result, if you look at credit standards, for instance, they're still almost as high as they've ever been. Both banks and non-banks really drew in their claws, and the agencies, Fannie, Freddie, and Ginnie Mae, have all made a big effort to both expand perhaps the potential market for whom credit can be offered, mortgage credit, that is, loans, but at the same time do it in a sustainable fashion. Their mantra is not only to make mortgages available to as many people as possible, but to keep as many people in their homes as possible. So it's become a dual mandate ever since 2008, and it really is the North Star, I think, for most of the people in the mortgage industry, because even non-bank lenders who theoretically have a little less skin in the game, they do have to repurchase mortgages if they violate rep and warrants and do other types of predatory lending practices. So on the good news, everybody's trying to work within those constraints to try to come up with new ideas. I mean, I will say that, for instance, Freddie, one of the areas that is a possible growth area is always first-time borrowers, especially with millennials coming into that window for the first time, which is the largest demographic. So while they're having problems finding homes to buy, they're also sometimes having problems coming up with the down payments that maybe a repeat borrower could come up with because they don't have home equity built up in the first place. So housing market is relatively unaffordable. So what a lot of different areas are doing, in particular both the GSEs and Ginnie Mae, is they are trying to improve access to down payment assistance. But it's for people with positive, good credit scores. So
how does that happen? Like, where do you get that?
Well, there's actually a big educational program to try to tell people where this can come from. And usually that down payment assistance comes with, a lot of insurance, extra insurance costs and things like that. But literally, I don't know the exact amount, but I think it's a $25,000 credit towards down payments, for instance, that Fannie and Freddie can tap into. And Ginnie Mae, for instance, FHA and VA both allow up to 95 to 100% of the loan to be financed. Again, that comes with extra mortgage insurance costs. But if getting your foot in the door is the difference between having a down payment or not, especially for first-generation homeowners, for instance, who don't have that generational wealth, then finding ways to get those people down payments is an issue. Is perhaps the game changer. The problem is, if the homeowner therefore has no skin in the game, because they haven't put down a down payment, are they more willing and likely to walk away? Which is why they get charged extra insurance, homeowner insurance costs to be in that.
With mortgage rates the way they are, my guess would be that the yields on MBS are looking pretty attractive. But I'm wondering what you're seeing as far as spreads. Is the lack of issuance sort of keeping those spreads down? How are you sort of sussing out the opportunities in the MBS market?
Right, that's a very good question. And low supply has been a tailwind for the sector, but because volatility in the markets has been so high, it's actually pressured mortgage spreads much wider than usual. And you don't have somebody like the Fed or even banks have been kind of stepping away as well recently, coming in as the buyer of last resort. You're relying on relative value investors who care a lot about risk return. They care a lot about hedging. So as a result, spreads actually went all the way out to like 190 basis points for the current coupon for new issue to treasuries back in October. They've since come in. They're around 140 basis points. But like when the Fed was buying in 2021, they were as tight as 70 basis points for new issue. So they're still very wide relative to history, especially relative to the 15 years since the Fed started buying securities.
Erica, really appreciate it. Thank you so very much. I learned a ton. Eric Adelberg, Bloomberg Intelligence, Chief Mortgage-Backed Securities Strategist on mortgage lending, on the market, and all the new rules and everything going into it and how to make a good investment out of it.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Let's get more insight here. Ben Emons is Senior Portfolio Manager, Head of Fixed Income at NewEdge Wealth. But what's so great about Ben is his daily notes, he does 2 a day, are so helpful in connecting different trends to the market. It's not just a fixed income thing. It's more like, here's a trend, here's how it plays in today's market action, which is so valuable to someone like me. Ben, thanks so much for joining us.
Great to be here, Alix. Hey, Mike. Good to see you again.
Do you have your white pants and suit ready for post-Memorial Day?
I'm a Miami Vice guy. I was like, it was Friday night, 8:30, Crockett and Tops. You got your flannel shirt on that my mom made for me.
I can see it. I can totally see it.
Shoes without socks, and let's go.
We're good. Wicker shoes. They're important. All right, Ben. We just sort of set this up. Vince was saying no cut this year. Apollo says the same thing. Goldman Sachs pushing back their cut. Where are you on this?
So I was on that for some time of I think many people realized that 7 cuts was just a really, I think, esoteric type of pricing in the markets. People very quickly rushing on the Fed's language that they are ready to move sooner. And then realizing that, we do have an economy that stays above the trend and isn't really slowing down to that trend. And as a result, you're getting price pressures. And we saw it yesterday in that PMI data, for example. If you get prices paid start to move up even further, there's not much room for the Fed to do anything, really. And that, I think, is the process we're going through, which is pushing that rate cut further out in the future. Whether it will become a rate hike, that is to be seen, I think. I'm not so in that camp yet, but I think that with this year, we're just going to be unchanged on the Fed funds rate.
Ben, I want to shift gears a little bit because I know you've been thinking and writing a lot recently about artificial intelligence. Mm-hmm. Obviously, NVIDIA is the big market story of the year. I'm curious how you're thinking about AI from a macro perspective. I mean, obviously there is the potential for vast improvements in productivity, but a lot of that type of technology-driven productivity gains can be a little weird when they happen. It could wake up some morning to read about a lot of job cuts because of AI is what I keep bracing for. So how are you thinking about this transition into sort of a really AI-driven economy from a macro level?
Yeah, let's start with investment first. I did some research on the data centers that are being built across the United States. Virginia obviously is the hotbed right now, but it's moving to other states. It's enormous. It's like there's an estimated 250 to 400 billion of investment planned into 2025. There's a consulting group out there that tracks the exactly square meters. We talk about millions and millions of square meters of data centers developed or in the planning. That's, I think, the productivity aspect of AI currently. It's about investment. And then you have, of course, technology companies that are spending on AI. So I think that's fueling the investment and then leading to productivity. Well, your point is about, once we get this productivity surge, we're going to get automation, we're going to get other things developing that maybe certain parts of labor become, obsolete, so to speak. They're not, being used, and that could affect productivity. I would say, though, that if you go back in the 90s when I started working, they just had rolled out Microsoft with a new sort of Office version, and the Bloomberg terminal, by the way, at the time was upgraded. And I was sitting there as a young kid like, wow, okay, I was able to navigate much faster than my older colleague. But yet, did that lead to a productivity surge? Apparently, the surge happened the years before, with all the investment that was put into this to get to that point of Microsoft rolling out and Bloomberg upgrading its terminal. I think that's what we're in right now. We're in the initial stage of investing. I think this is part of what the economy is currently reacting to. If you look at durable goods data again today, all the elements about computer chips and computers and all this type of equipment, that's all up in new orders. I think that's what's going on there.
Which I really appreciated your note on Wednesday when NVIDIA did come out, because you talked about how to relate that to, say, the neutral rate. And then if you wind up having all this investment, does that raise the neutral rate? And does it make it harder for the Fed to cut? You have to keep, because it just raises all that growth potential. Can you talk to me a little bit more about that thinking? Because there is a question as to when that money is really going to materialize with shovels in the ground kind of thing.
Yeah, exactly. Because the shovels in the ground will ultimately, I think, affect the economy really significantly, and that's obviously to an extent happening. So Waller just dropped his speech this morning about the R-star discussion, and think about it this way, right? The idea of that the economy is at a certain level currently, let's say 4%. And the trend says at 2%. So if potential is say at 2%, this what they say neutral rate should be around that number in real terms. Add on what we're just seeing with inflation expectations, you're actually talking about a nominal neutral rate that's maybe higher, right? Maybe to 4 to 5% range. And if we're then looking at where the Fed is currently, then we're not as restrictive if you compare it to the Fed funds rate where that estimated neutral rate is. Now, where does the company comes into play, or actually the AI really, because it's really not so much the company, it's more the effect that it has on AI investment. One key factor, obviously, as we talked about, is that if investment in the economy picks up so substantially, the productivity gains that you get from that, it does lift potential output. And I think this is the link between something of the AI development that we're seeing to this idea of neutral rate. And I think the Fed has started to acknowledge it, because I noticed in the minutes there were different snippets in there where the Fed members were talking about the enhancements of technology and the productivity efficiencies lead them to think that the economy could accelerate, could improve. And that's where that neutral rate discussion comes in.
Ben, I'm smiling reading your interview notes here because it says Ben does not opine on crypto or cannabis, which is kind of refreshing because I feel like I've heard enough takes on both. But without opining on crypto, though, I would say let's instead talk about meme stocks, kind of the same issue as crypto. This exuberant risk appetites right now, we used to think this was a low interest rate, excess savings phenomenon. It appears not to be the case this time. What do you think's going on with all this?
Yeah, I mean, so in 2021, we had just simply a massive surge of money coming in, and people were trading and doing it all, right? And it affected a lot of different parts of the market. Why the same phenomenon comes back is not 100% clear, but I do think it's part of the environment. We have the VIX being really low. Mm-hmm. We are, again, maybe in a period where what we experienced in 2006 or 2017, where we had I would call it a dry spell of the VIX. It doesn't move a whole lot, even if the market sells off one day by 2-3%. And I think that has to do with that. The market, I think, is very clear on where the economy currently is. There's not much uncertainty about that. And second, that also ties into that there's probably not much uncertainty anymore about the Fed itself. Mm-hmm. They can just stay on hold. They don't have to do anything. And lastly, any type of geopolitical tension or political tension that's out there is being viewed as, okay, that could derail this scenario, but it isn't really doing that. So therefore, there's no reason to have any volatility. So I think this is what I'd say.
All right, Ben, we appreciate you. Thank you so much for coming. Ben Emons, Senior Portfolio Manager, Head of Fixed Income at NewEdge Wealth.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
So as of tomorrow, it will mark the 4th year anniversary of George Floyd's death. A 46-year-old black American man that was murdered in Minneapolis by Derek Chauvin, a 44-year-old white police officer. Just to remind you, Floyd had been arrested after a store clerk alleged that he made a purchase using a counterfeit $20 bill, and his death sparked numerous protests across the country on race relations between African-American community and law enforcement and the excessive use of force by the police. And soon after George Floyd's murder, Minneapolis declared several changes like bans on chokeholds, neck restraints, and other requirements that police tried to de-escalate and avoid using improper force. It's worth taking a moment to check in then on where we are 4 years later. Marc Morial is CEO of National Urban League. National Urban League is a nonpartisan historic civil rights organization based in New York City that advocates on behalf of economic and social justice for African Americans and against racial discrimination in the United States. Marc, it's a true pleasure. Thank you for joining us on this Friday.
Thank you for having me.
What we saw 4 years ago was a true awakening in the United States on race relations. Where is that awakening now?
So thanks for having me. So a couple of quick things. We saw in the wake of George Floyd's tragic murder, an uprising, an awakening, a consciousness in this nation. And I believe that that consciousness is still strong. I believe that the intentionality of many to overcome the legacy of racial justice and build an America for everyone in the future is still strong. But I would be less than candid if I did not say that now what has emerged is an orchestrated backlash movement. It manifests itself in attacks on voting through voter suppression. It manifests itself in attacks on African American and LGBTQ history through book bans and alterations of curriculum, politicians interfering in what takes place in schools. It manifests itself in the new attack on corporate and university DE&I. But I have to tell you, the will, the determination, the fight by many of us, and I think I say for the majority of the American people, to continue to push towards a more just future remains extremely strong. The only other point I would add is that in the case of George Floyd, the offending officer, the accused officer who is now a convicted felon, Derek Chauvin, was convicted in both the state and federal courts. And in that case, justice was done and someone was held accountable for George Floyd's murder. But the need in this country for a national police accountability measure, we called it the George Floyd Justice and Policing Measure, is still elusive. It didn't get through the Congress because of the filibuster in the Senate. But the will and the support and the intention and the work that we're going to do, it was reintroduced yesterday in the House, remains strong. We will not give up.
Marc, speaking of that backlash that you're talking about, obviously it's campaign season in the U.S. Right now. Donald Trump gave a rally in the Bronx borough of New York last night, and he said, quote, "I'm going to indemnify all police officers and law enforcement officials throughout the U.S. to protect them from being destroyed by the radical left for taking strong actions on crime." Now, I can't quite wrap my head around whether he'd be able to actually do that or what that would look like. But I'm curious if you heard those remarks, what you think of them, and what you think his chances of being able to do that.
Let me say, they're reprehensible. No American, no public employee should be indemnified and not be accountable for wrongdoing. What will you do next? Indemnify all embezzlers? Indemnify all murderers? Indemnify all sexual offenders? This is Donald Trump making extreme promises. But what Americans should be aware of is that he has the, if you will, gall to say these sorts of things in an effort to animate voting, in an effort to appeal to his base. America is not, no one is above the law. So now he's saying, let's place law enforcement above the law, even when they indiscriminately take the life of an innocent American. Mm-hmm. No, the badge and basically a certificate to be a police officer should not place you above accountability, because no one should be placed above accountability. And I hope Americans recognize that that what he said is offensive. It certainly would be resisted, but I do not Nothing Mr. Trump does, no extreme statements he does, surprises me anymore.
Yeah.
And Americans should be very aware of what that statement really means.
Marc, when you talk about D&I, particularly in the workplace here, what it seems like is that you said the backlash and a calculated backlash. What I've anecdotally noticed is you wind up promoting people or hiring them, but then the voice isn't heard. And I'm wondering how we solve for that problem. Sorry, we have about a minute left, and that's a big ask in about a minute.
Look, leadership in companies have to work on including people, ensuring that their voices is heard. This is how people get, if you will, assignments, how they get appointed to internal committees within the workplace. Look, leadership can make a difference. I've led organizations now for most of my life. I lead a large institution today. Nationally, we have almost 3,000 employees. I ran a city that had some 15,000 employees. Leadership can set a tone that when I bring people in, I'm going to make sure they're included. I'm going to make sure their voices are heard and create that kind of tone and atmosphere. And there are companies that are bucking those sorts of trends, but you're right to point it out as one of what I call the continuing challenges. This is ongoing work.
Marc, we really appreciate it. It's an important message and it's important work, as you state, and we appreciate you checking in with us 4 years on. Marc Morial, a CEO of National Urban League, on the 4th anniversary of George Floyd's death that is coming tomorrow on May 25th.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.